wherever you are. Hope you're all doing well. Hope you had a very restful weekend, traders. Hope you had a very restful weekend. All right. Hope you're ready to start off another dynamic week of trading. Now, listen, traders, you know that this is precisely the time you should be um, doing the little bit of preparation we typically do right before the open, knowing that we can't really prepare too much before the open because there's no way for us to predict what the first 2 minute or the first 5 minute bar of the day is going to be. So we need that first 2 to 5 minutes to materialize first before we really um, wrap our hands around the morning situation. But what we can do is take a look at the items on our list and find out where they're likely to open in relationship to their moving averages, in relationship to their fabulous four, right? So remember, let me get my pen up here. So again, if I take Tesla as an example, all right, it looks like we're due for a little bit of a bloodbath this morning with a lot of stocks. Is if I were to take the 20-period moving average of Tesla right here, all right, the 200, all right, if I were to take the prior day's closing price here and the late day price range of the prior day, if I were to take all of these items and box them, I'm looking at a fairly wide Fab 4, okay? And if you look at this black ribbon, this is telling me that Tesla is indicated to open below a wide Fab 4. So that's the type of preparation we can do for each one of our stocks before the open. You want to make sure that you're not doing that too early in the morning because this radically changes as we approach the open. So I tend to do this about 5 to 7 minutes before the open, and it's one of the main reasons, right, why I log in with you about this time, because I don't want you expecting that you can do a lot of preparation 20 minutes before the open or 30 minutes before the open. All right. So guys, look, this is the day where I focus a lot more, less on my trading, a lot more on your trading. All right. So I want to see what you're identifying. Don't be shy. Share what you're identifying. Share what you're doing. Share what you see. All right. I'm going to work through things this morning. I'm going to give you things that I think are developing in an interesting way. All right. And as a final reminder, I do want you to understand that while I know we're very excited to start another week, Mondays are the most exciting days for traders because we've not been trading for the most part Saturday and Sunday. But it is a day that I want you to be still relatively conservative in your approach, because you don't ever want Mondays to be a disaster day. All right. It can be a losing day. I mean, that's normal. We're human. We have losing days, but it should not be a disaster day. You don't ever want to start off your week with a disaster day. All right. All right. So I'm seeing a lot of you already sharing things. That's awesome. All right. We've got about 30 seconds to go here, guys. Do not think that something is going to be a short or something's going to be a long before the open. All you can do is get a head start on where it might, but don't think long or short. That's a mistake. All right, just because it opens in a certain location doesn't mean it's going to be a long or short. We don't know what the first bar is going to be, so don't let the market catch you leaning like that. All right, guys, we are off and running. All right, as I said, Tesla, as an example, has opened under the Fab 4. Taking a look at Apple here for my Apple traders. I love the location of Apple's open here, right under that 200 period moving average. Let's just see how it develops. Don't feel and believe like you got to do something right now. All right, that you don't have to do something right now. You can give that stock that first minute to see how the bar is going to form. All right. All right, nice. Okay, so Apple, nice position, but again, a lot of you are continuing to think that if you don't act in the first few seconds that you're going to miss something. That's not true. Remember, the vast majority of your trade should happen after the first bar is finished. That's the majority of your bars. Just so you know, guys, take a look at my play here. Not too bad. $1,000. Boom. That's the Apple short. Not bad. Not bad for a couple minutes there. But I don't want to. Okay. Boom. What else is going on here? Let's see. Give me a second here, guys. Oh, nice. Nice, 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 nice. All right. I'm too poppy. There's 1,800. Boom. How many minutes? 2 minutes. 1,800. That's that perfect location. I'm telling you, right? That perfect location, right under the 200. All right, less than 3 minutes, 2 minutes and change, $1,800. Finding the right location in relationship to the stock's Fab 4. Boom. Nice. All right. Did anyone get that, by the way? Awesome. Wait a minute. Let me see if I can. I don't know if I can do this. Guys, if my screen starts freezing, it's because I'm doing the full monitor. Sometimes my connection can't handle that. But guys, how many people did the Apple? Did anybody do the Apple with me here? Nice, JR. Nice, Kelvin. Nice, nice. Nice, Chris. Nice, Clemente. Nice, Sergio. Tyler, Delroy. Nice. Beautiful. It's still moving too. Still moving. So guys, yes, it can happen just like that. It can happen that quickly. Listen, what else is going on? Let's see here. All right. Here's another scenario, guys, of a stock opening in a very good location as well. See, right under. You don't have to be touching it, but right under that 200 period moving average. Boom. All right, beautiful. Guys, did any of you get a downloaded new version of IFT Trader Pro? Yeah, we did. All right, yeah. I'm actually working on even another version. My version that I'm working on is even different from yours right now. But We're developing some interesting things that I'm going to be rolling out to you soon. So, all right. All right. So, guys, here's an example, right? Here's an example of CVX, right? Opening in what would normally be a position where you'd expect it to move down, but it moved up in a powerful way and it's continuing up. This is why I said don't jump the gun and automatically believe that something is going to be a long or a short based on where it opens, because you need a portion of that first bar to develop first. So the trader who jumps the gun and just goes short, bets to the downside just because of where this opens, all right, gets hurt. All right. Um, Missed money sometimes is better than lost money. So sometimes by waiting a little bit, you might miss a little bit of money, but it's better than lost money. All right. All right. So oil stocks are very powerful today. Oil stocks are the movers today. All right. Exxon. All right, guys, let's monitor how these pull back, right? They're very powerful moves to the upside, which means that oftentimes the pullback, as long as the pullback is orderly, these things can be potentially nice um, buys on their next pullbacks, or in some cases on their next RBIs, right? All right, their oil stocks looking good, looking strong today. All right, guys, talk to me. What are you doing? What are you guys doing? Tesla getting slammed here this morning? No, Tesla rebounding back. Okay, LVS, let's check that out. All right, now, Parvan, you're long LVS under the 200 period moving average after a bear elephant bar. Not the best setup as far as I'm concerned here. All right, you're fighting location and you're fighting power. So you're under everything. This is negative territory. All right, you scalped it already. Yeah, but these things over time are going to hurt you. I'm telling you. All right, this is more of a potential short for a move back to new lows potentially. I mean, I do know that things are sort of bouncing back here, but just be careful with those plays, okay? Um, JR, you're still in the Apple, all right? Parban, this is what I'm saying. See how sometimes, guys, I'm always explaining to you that power bars, right, shoot their influence to the right. I'm going to do this again. So that power bar there is shooting its influence to the right. Okay. Now, on a move back up, it's going to be difficult for a move back up to break through all of those levels of resistance. And usually there's a there's a new move back to the downside. As you can see, that's happening. We'll see how far it can go, but it's difficult for a stock to fight the influence created by a fat red bar. This works for the green bars as well, at least on the first attempt. it's difficult. The second attempt might get through, but the first attempt usually has some trouble. All right. All right. What else are you doing? C. Yeah, C has some power there. I see that in this range. Okay. Now, sometimes, guys, a stock can create its own trap zone. And this is something that I think is really good to explain. Um, a stock creates its own trap zone by having power moves in both directions. So let me draw an example for you. A stock has a power move up, then a power move down, and then it moves back up to settle in the middle. Now, what this creates is resistance at the top where it fell from, support at the bottom where it rebounded from, and now the stock gets caught in a cage. All right. And in this cage, it's very erratic and unreliable until it frees itself from this cage. Okay. It's got a floor underneath, it's got a ceiling above. So if you look at C here, C is trapped. Here's the strength. Here's where it here's here's the strength up, the power down, the settling back in the middle, and it's now trapped between these 2 points, and it will be erratic until it frees itself, just like a caged animal might be a little wild until it gets free. All right, it's not free. All right, so that's a good concept to be aware of, knowing when your stock is trapped between major resistance and major support. All right. Oracle. All right. Oracle is the same, right? It is now trapped. Okay. Now, that's very different from a pullback. A trap is different from a pullback. Let me show you the example of that. So when a stock moves up powerfully and pulls back, that's not necessarily a trap because the pullback is orderly. A trap is created when the drop is sharp and then comes back. And it's these 2 points that create the trap. All right. But that's different from a pullback that's more gradual. That's not trapping. All right. Guys, you see the difference? You guys understand the difference? A few of you let me know. You got it? All right. Cool. So know the difference between trapping and pulling back. Very big difference. All right. Let me scroll through here, see what's going on. Okay. All right. So see this oil stock Exxon is trapping now. See, it's trapping. That's not an orderly pullback. An orderly pullback is more gradual, not straight down like that. So that straight down is will tend to create a trap. And inside the trap will be a lot of uncertainty. All right. So good lesson today to understand the difference. Patrick's asking about Twitter. Same thing. Twitter, sharp pullback. Now, it doesn't mean that traps, if you're in a play and a stock drops and traps itself, but the drop does not trigger your stop, your protective stop, that's okay. Just don't let the trap change your plan. Don't think that you should exit early because your stock is just trapped. Follow the plan, but understand what your stock has become. It's become a caged or trapped animal, if you were. Sometimes the stock eventually works itself out of the trap. All right. We can't, if you're in the play, we can't predict whether something is going to trap itself or pull back regularly. That we can't predict. We just have to deal with it. All right. Anwar is asking Oliver, I had to switch to a 1 minute chart to catch CVX early this morning because the bars were big. Well, here's I'm okay with that. So what Anwar is saying is that here's the 2 minute chart. You know, I'm not a huge fan of dropping to the 1 minute chart. But what Anwar is saying is that he needed the 1 minute chart to get a more refined view because the bars were growing big. But here's the thing. In the first 1 minute, here's the 2 minute chart. In the first 1 minute of the 2 minute bar, isn't that the 1 minute chart? Anwar? Yes? The first 1 minute of your 2 minute is the 1 minute. So why did you have to go to the 1 minute? You know, so as far as I'm concerned, if you're looking to if you're looking to judge the first minute, you already have the first minute with the 2 minute chart. Now, if you're looking to judge it beyond the first minute, um, that's a different story. I'm not the biggest fan of that. Right? Sometimes, guys, you can get a little too close to the trees and you start to lose sight of the forest, you know? All right, but again, here is CVX trapping itself. All right. Now, let me talk to you about this. Let's say, for instance, right, you're in this play, it moves up, you take some profits off like you should right here, but you don't take it all. You leave some in, which is okay. And then the stock traps on you, drops sharply. Now the odds of the stock moving to a new high have become less. So where should your target of maybe getting out be lowered to? It can no longer be here. Where can it be lowered to? Yeah, about halfway or slightly more. All right, boom. Knowing when to lower your target. On a regular pullback, our target is up here. Boom. But on a trap, our target gets lowered to here. Boom. See? So you got to know when to lower that target when your stock starts trapping. All right. Is Merck a trap? Not necessarily. This is not necessarily a trap. All right. Trap yet. All right. Remember, Sometimes I love where this opened up. Isn't that such a beautiful location? Remember how perfect Apple's location was on the short side? Let's look at Apple again. So Apple's location on the short side was perfect because it was right under the 200. All right. Now on Merck, it's the opposite. Its location was perfect above the 200. It's such a beautiful thing. Who caught that Merc off the open there? Anybody catch that off the open? Robert did. Ryan, Tal, nice. And you guys didn't share? You didn't share your spoils with us? You're being selfish? We're a family here. Come on, share. Share the goods. Share the spoils. All right. All right, beautiful. But no, this is not trapping yet because you've held the 50% retracement level. All right. So remember, you can ignore the tails, guys. Tails can be ignored. In fact, let me erase it for you so you can see what I'm saying. You can ignore the tails. And so we've held that 50% retracement level. So that's not a trap. Okay. Okay. Anders saying, should we use this? Should we move the stop? Yes, you can use the time-based stop now. Now, what Anders saying, guys, is there's a stop that is based, and you see how this stop, see how Apple is now kind of basing. When that base gets long enough, you can drop your stop down above the base. That's called the time stop. Price is this way, time is that way. All right. Oh, but it's like it's trying to move down a little bit. You got some support down here, these tails. We'll see what Apple handles itself with that support. Intel short. All right. Okay, moving to new lows. Okay. Here's another one of those. Here's another example of being able to, not that it's much of a change, but here's that time-based movement. You can lower the stop to. Now, what makes this area really interesting in Square is where that's happening on the 5 minute. Look at the 5 minute. Wow. Look at that beautiful location on the 5 minute. You guys know these are my go-to locations. You know, anything that's opening right above a 200 period moving average or right below a 200 period moving average, that's my number one setup. That's why I immediately took the Apple. Opening in that beautiful location is almost a guaranteed trade for me. All right. Starbucks short. Guys, look, don't be shorting Starbucks. No, I'm teasing. They have to stay in business. All right, Starbucks looking interesting. But the move is has occurred already. I want to see how this rebounds or releases, right? Guys, let's talk about this because I see some traders get trapped by this, right? Get stuck with this. I want to demonstrate something. A stock is doing this, right? And then it drops and it breaks to make a new low here. And I see a lot of traders jumping in on the trade here because it's breaking these lows. This is a mistake because of where it's come from. It's already come from here and given you 1 bar, 2 bar, 3 bar, 4 bars down. So you're actually entering the play late. That's a mistake there. All right. So when is it appropriate to do it? Well, when it's narrow. For instance, when it's narrow. Let me give you a sample. Let me give you an example of it being narrow. Boom. Now that is okay to bet on the downside right there because it it's just getting started. It didn't come from way up here and drop like that. It came from here. It's little. Does that make sense? You guys got that? All right. So you don't short this below the 200 just because it broke the 200. You don't do it there because of where it started from. You see? Okay. Yeah. So if in this example, you'd be wanting to monitor how it pulls back and see if you get a sell signal somewhere up there to maybe bet again on the downside. But if that move up is too sharp, you create the trap again, right? So remember, if this move goes goes sharp like that, you create the trap. So now the stock is trapped again. We want orderly pullbacks predominantly. Parvin, what do you mean by the previous example? Okay, cool. All right, INTC was making new lows. All right, okay. Looks like this is doing what now, guys? What does it look like it's doing? Yep. Grinding power trending. Got to take that 8 train. All right. We got to take that 8 train. You guys know what the 8 train is? By the way, where does the 8 train go? You know where the 8 train takes you? Where does the 8 train take you? Ah, well, it takes you where I live. It takes you to the land of profitability. It's the land of profitability. I live in the land of profitability. Yeah. So yeah, whenever you've got a play that's power trending, you're on an 8 train, just say, Oliver, I'm coming to visit you. All right. Right. Willie Apple on the GBI. Nice. Nice. All right. And initially, guys, first your stop is here, and you can move that stop on top of time. And now, where are you going? Where are you going if you're still in it? Where are you going? To the land of profitability. Let's put that 8 period moving average on here. Boom. Uh-oh. I'd now go from the 8 to the top of the big bar, right? Now it's the big bar stop. Go ahead and do the pound dollar. All right. Test it. Look up here. Get this 8 out of the way here. So you see that trap scenario I was telling you about with Exxon here? So we drop hard. Now it's trapped between 2 strong moves. Anil, why did I get out of Apple so quickly with just $1,800? Anil, let me just say that. Let me just say it like this. The days I'm with you are your days. If I get into a trade, first of all, I trade lighter when I'm with you, and I'm in and out for my change, and then I focus on you. If I take a trade the way I normally do, I promise you, you are going to be ignored. I won't see you. I won't see anything that you are typing. I won't see any questions you have. You will be ignored. So I usually just take 1 or 2 very quick trades, grab some change, and then focus on you guys. On these days, and thank God I don't do that every day, but yeah, I try to do it as quickly as possible, Anil. Yeah. All right. What else is what else is going on, guys? Lots of these things coming back. Wow. Guys, what's the key sign that your stock, this is a good one. What's the key sign that your stock is not healthy anymore after strength? What's the key sign? So your stock initially shows strength, and then it starts a rest. Then it starts to rest. What's a key sign during the rest that it's not healthy anymore. It starts, that's right, Alina's got it right. Violence, a violent bar, you see, these bars are not violent, right? But if you get a sharp bar like that, that bar tells you that it's no longer healthy. You see this bar here? Here was your strength. This bar tells you it's not healthy anymore. Oh. So, what can you do when you get violence like that if you're still in Twitter, all right, and your stop is down here, let's say, and you get this violence, should you get out or should you just adhere to your stop? This is where the number 20 I spoke about this weekend comes into play. It's not wrong to just stick to your guns because many times these things settle out and go, but a lot of times they don't. So the number 20 is going to reveal for you which method is best. Do I just stick to my original plan, or do I add to my trading plan that whenever a violent bar changes the scenario, I exit? Whichever one you choose should be done consistently. Like, you shouldn't mix them up, right? There's no right or wrong answer with that. All right. So, if you decide that a violent bar happens on the pullback, even though you haven't been stopped out on that violent bar, if you decide to exit the play, that must become a line item in your trading plan. It's not something you should do this time and then don't do it the next time. It's got to be a permanent line item that you apply every time. I'm going to exit every time a violent bar occurs. The reason for this is because you need to approach every trade the same way every time, no matter what. And it is that every time the same way that creates consistency in your trading. You can't get consistent results by doing things inconsistently. So you have to do it. If you choose that, you got to do it every time. And if you don't choose it, you got to let it go every time. Now remember, in your 20 trade reviews, it might you might become aware of the fact that I should be doing something different. Like, your review of your 20 trades might show you that, hey, wait a minute, I'm coming out on every time there's a violent bar, but wow, many of these things would have still made me money. Well, then maybe you should change it. But you have to let the number 20 reveal it to you. All right. Okay, Kendall, you waiting for the pullback on Oracle? All right, yeah, we can see. Monitor that pullback there. This bar is getting a bit strong. Guys, you know I love these locations. I'm gonna keep putting it in your face, into cara, until you get it. Beautiful, solid red bar right around the 200. Stop above the high. You get another red bar there. Boom. Color change here. Boom. That's beautiful. I know I've got some MU traders. Did anybody trade this one here? This is beautiful. Anybody trade this? No one got that this morning? Guys, I believe that 200 period moving. Oh, nice, Eugenio. Beautiful. I'm glad you got took advantage of that. Guys, I believe these 200 period moving average plays off the open should be your number one focus. That's what you do your early preparation for 5 minutes before the market opens. Is there something that seems like it's going to be opening near its 200? You can tell that a few minutes before the open. And then, you watch how the bars form from that location. But you're not going to get a more reliable location than that off the open. All right. And yeah, I find that the location is reliable across all time frames, Kelvin, because Kelvin's saying, is it just the two? Is it 2, 5, and 15 too? So if I see that location on the 5, I pay attention. Absolutely. Yeah. That's what happens when you start growing, Kelvin. You start to love all the time frames, you know? And guys, you know, I it's interesting when I hear you say these things like I like the 5 minute better than the two. I like the 2 minute better than the 15, whatever. But in reality, the stock market doesn't have time. It doesn't have different times. That's our creation, right? It's a constant flow. That's right. It's our creation. Like I create the time. I create the separations between the bars. That's my creation. The market doesn't have separations. The market doesn't have bars. The market just has one fluid flow. It doesn't have a stop. It doesn't have a stop and a go. It doesn't even have red and green. It's just one river, right? Now we break the river up into little pieces, but they're our own creation. So whether you're trading a 2 minute, 5 minute, 15, you're really trading the same thing. It's just that those views help us see nuances better. All right. Guys, this is an example of an orderly pullback. See? So here's your strength. Here's that orderly pullback, and boom. You see? There's no violence in the pullback. There's no sharp straight down. That's those are the pullbacks you want to take advantage of. Boom. Right? The orderly ones. And remember, everything that we're trying to take advantage of is the whale. Every time. That's the whale. One, two, three. One, two, three. That's all trading is about. One, two, three. Buy, profit take, Right, that's how it goes. So here's the buy right off the 200. See it right off the 200 there? There's the buy. There's take a little taste for yourself. Put some money in your pocket right there. Boom. Monitor the pullback. If the pullback is orderly, boom, hit that thing up again. And there's your new high and profit take again. All we're looking to do every time is catch the whale. One, two, three. Whale complete. One, two, three. Whale complete. Whale complete. Whale complete. You can keep a little of the whale and see how big of a whale you get. Sometimes your whale is huge. Sometimes you get a huge whale. Sometimes you get Moby Dick, you know? But you take some profits here, and if you want to leave some in and see if your whale becomes Moby Dick, fine. Throw that 8-period moving average on there or that 13-period moving average and see how far you can go. Guys, is my screen frozen? Sometimes when I broadcast the whole screen, it freezes. Oh, Can you do you see me drawing on the chart right now? Yeah, just the bandwidth that this requires is huge. It's just slow. Okay. Little delay. All right. In Portuguese is frozen. Oh, that might be um Iago's connection, Emilio. Thank you for letting me know. Here's another one, guys. Here's another one. Here's another example. Take a look. One, two, three. There it is. Beautiful play off the 20-period moving average. Guys, you know that the majority, I covered this thoroughly Saturday for free for thousands of people, remember? It, your your two main locations is to get power off the 200. There's power off the 200 here. Power off the 200. Boom. And power off the 20. Boom. Power near the 20. Boom. This is, and it doesn't even matter what time frame you're looking at. Look at the 5 here. Off the 20. Boom. Or off the 200. Boom. The majority of your trades should be that, right? Apple was off the 20, right? The 200. Boom. MU was off the 200. Boom. You get the point. Merck was off the 200 and orderly pullback. Boom. There's that 1, 2, 3 profit take. All right. This is whale complete. Boom. This can be your day right here. Remember, power off the 200. Take a little taste for yourself. Orderly pullback. Boom. Hit it up again. New high. Profit take. Go to the beach time. Screen slow, guys. Yeah, that's because I'm broadcasting full screen, guys. It just starts to get really slow. But you understand the whale complete? You understand the themes we talked about today? Power off the key moving averages, whale complete. What else? We talked about the difference between an orderly pullback and a stock trapping itself. We talked about when it traps itself, you got to move your target down and you no longer look for a new high. Some really important themes covered today, guys. All right. You all know that you are my babies. I love you to death. I want you to enjoy the rest of your trading day. Be safe. Be careful.
All I want is you.